jelly and some water, of course. Need a 𝐄𝐍𝐓 and some water. Oh, almost knocked over my guitar. All right. Check it out. 1, 2. I think I don't know. This is a crazy battle on the red line, and the red line is the monthly 10. This is really, really intense. If you want to see that red line, go to the month. One of my kids left my office door open, and freaking flies in here now. So if you see me twitching, I'm not really quite that weird, because it flies on me. Anyway, so you see that red line here, this red line? That's the 10 EMA of the month. Oh, just moved on me. And the battle of price, as my recent YouTube video I just released, showed and pretty much proved beyond a reasonable doubt. There's no proving, it's just how price goes. I mean, it's not a big secret, but so I drew that, and then you go like down to the 3 minute. And you see almost all the battles on this line. And so since this month and quarterly and 6-month candle closes in literally 1 hour and 57 minutes, all of the battle is right here on this 10, because that's going to mark bull market or bear market, or not necessarily. It'll mark potential bull market continuation or nearly definite crypto winter for a fairly extended period of time. So for folks that aren't part of my Patreon community, I typically use ribbons to view price, and a lot of times I take off price. I don't do this on YouTube very much. I've developed these now, although there were ribbons before I developed my own. I actually didn't know there were ribbons before I developed it, but mine work slightly differently, even though they do flip. But I have a different gray line that no other trader has, and it seems to work like magic on multiple time frames. For example, the daily. Watch this. See that gray line down there? Look. That big drop, it went exactly to it. Go back to the previous bear market. It's like magic. The first big drop went right to it, and then the second base was right on it. It's pretty cool stuff, and it really works. It's even cooler on the crackhead time frames, because what happens is if you take price off, the 3 minute is essentially like a 4-hour chart, and 4-hour chart is a really awesome chart to be using. So you can see when power is literally being flipped. You can see it exactly like right in the moment. Bulls are, bulls look like they might be losing bulls, and then when it flipped, you clearly saw. So put price back on there. That was so when it couldn't even retest back up into it on the 3 minute RS or 3 minute Stokes being all the way up. Yep, it's gonna be done. However, sometimes that is when it pops. I kind of thought at the moment it would have been just as likely to pop up there. Sometimes it does a fake out and it pops right when that happens. Similar to what just happened back here. So I actually thought something like this was going to happen, where it failed, is all converging, and pop. So the convergence of this ribbon touching that gray line marked the pop. And it's a pretty common thing on this. This is essentially like if you take price off, it's literally like a 4-hour chart. So that's what you're staring at here. And I like to watch price like this, and I can go down to the 1 minute, which is kind of like a 2-hour chart. So the bulls clearly took, inter-hour control. So it doesn't mean they're in control forever. They're definitely out of control on like a weekly and daily scale. But on an hourly scale, because this 1 minute, the ribbons are like it's roughly like an hour and a half. It's almost exactly a 90-minute candle here, what you're looking at. So for this 90 minutes, the bulls definitely took control, and right now the bears are really fighting them because it's starting to converge here, and it's all based around that gray line there, even a little bit below the. Did I draw the monthly 10 EMA that high up? I don't think it's that high up, is it? I think I drew it slightly too high. It's actually curving down. Let me redraw it. Pretty sure it's not that high up. So what you're seeing here is literally, like, when you see battle of bulls and bears, this is what's happening, and I'm just gonna walk you through. I can't put trades, or I'm essentially trying to add to a trade slowly, but right now it's looking a little too indefinite. But if I do, when I do that, because I'll have another screen open here, I'll walk you through what I'm thinking, but I can't show trades. I can get in trouble doing that. Let me see here. You got some questions here. Yeah, I'll go through your questions here in a second. So let me, did I get rid of that line? I should have. Okay, yeah, so it should be curving down. Something like that. Now go on the 1 minute. Something to that effect. There you go. However, this tick on the monthly can move, so technically it might actually be up a little higher. If this monthly were to close higher, this tick, instead of being like a flat horizontal, it would tick up at a slight angle. If the monthly candle itself, if you go back to the month, because it's actually not set in stone until 8 o'clock. This tick, so it moves in segments, right? If you have seen EMAs lock into place. So right now, this juncture here, this juncture here, this juncture here are not locked. If price were to tank like this down to $6,000, this juncture here would turn to that would turn down, that would turn down, so on and so forth. So if price were to close up here at 45K within the next few hours, which I'm not saying it would, that's very, very, very unlikely, then this juncture here would tick up just ever so slightly. Probably not that much, but it would tick up just a little bit, right? But right now it's ticked kind of down, maybe not even that far down. It's right at it right now, so it might be pretty flat, because it's right at it. So I honestly think it's a straight line right now, but it changes as the hours go. So I'm gonna make a red line there, and that's the monthly 10 EMA. All right. So where is it in this scope of things? All right. So yeah. The 10 EMA is actually right there. It's where all these sticks go. Yes, that's where it lost control. Lost control. Perfect. Yep. So the losing control. So see how these bands flipped there? They flipped where? Right at the monthly 10, because if you have, oh, is that a big dump that I'm saying? No, not too much. Yeah. So it flipped there, and one of the big reasons why so many people hit market sell is because this was a clear point that, oh, bulls might gain control and gain this 10 EMA back, and nope, and sell, big sell. Because this doesn't look like this was a hedge fund doing this, because this looks like natural price movement. But this is clearly big buyers coming, or big sellers coming into play, right there. And so whenever you see these big horizontals, so this is kind of natural looking because it's on multiple candles. But when you see crap like that, and you see multiple in a row, oftentimes that forms a BART pattern, because that's when the folks whoever is hitting market buy with millions and millions, maybe dozens of millions of dollars, when they let go of it, the market just does like this, and they keep selling just slowly for, a tiny bit of profit, 1%, but 1% of a million is a big number, right? So or 10, I guess, 10,000. So if you're trading with $1 million and you get that within just a matter of 10 minutes, that's 10 grand. with only $1 million, and so people can do that with 50 million bucks, and so that's why you get a lot of these. That's just big players coming to play because they can play too. Yeah, so this is a pretty nice looking battle going on right now. This is pretty insane. Oh my goodness. All right, so let me see if you all have any questions. So again, although I'm on a crackhead time frame, the 1 minute, and I don't recommend really ever trading on that, except for when you have things coming down to the wire. Like this is kind of like overtime, right? If you ever watch American basketball, this is like overtime, 2 minutes left essentially, but we have an hour and 48 minutes left technically. But this is essentially overtime. It's a big deal. So zooming in on such a time frame is kind of important in moments like that. But in bull runs, it's really not important to do that at all, unless you're a permanent scalper, which that is a trading style, and that's perfectly fine. But most investors and newer traders try to do this, and you don't want to. You don't want to do that at all. All right, I think I'm gonna guess that could be a higher low, even though we do have a lower high. But typically, the way you overcome an obstacle is by getting rejected and forming a series of perhaps lower highs, higher lows, and then the higher low becomes into accumulation under something, and then you break through. Or sometimes you just, converge, and bust through, like we saw when I scrolled left here. So let me go to the 3 minutes, see what it's doing. Yeah, it's converging. So I would prefer to see this converging above the gray line, though. I don't like that it's below that. Because the last big pump that Bitcoin got, I think it happened above it, not below it. See that? See how it all converged? The bulls were losing power, and then big algorithm stepped in. So, these ribbons kind of show you, they give you a good guess on when the big players are going to step in, because even though they're not using the same system for whatever reason, my ribbons, they just show you like high probability moments like that. Even though from moment to moment, so you had a flip to this moment, that was a whole day, right? So you don't get big moments like that all the time. In this 3 minute chart, again, it's like a 4 hour chart essentially, especially if you remove price, so that you're looking at a 4 hour chart. So this is kind of like, I don't know, maybe equivalent to the 4 hour trying to get above its 10 EMA. I don't know if that's exactly what's happening. So let's go to the 4 hour here. I mean, I don't think that's precisely what's happening, but it's similar to that. Sometimes the 4 hour has a struggle getting over its 10 EMA. And right. Oh, that's actually exactly what's happening. Look at that shit. See? Look at that. Yeah, so the 4 hours getting blocked by its 10 EMA. Block. If it can close above, so it's got almost 2 hours. Actually, this is the last 4 hour candle. So it's this or nothing. Yeah, that's not good. I might actually I don't like that. One thing I do like is that the 4 hour Stokes might have a chance to cross, but that's on another tick though. Another good thing going for bulls right now is that the 2 hour are crossed up, and the 1 hour is in the bullish control zone. No, it's in the neutral zone, so that's kind of iffy. But that's pretty common of a battle on a front line, right? Like everything's back and forth. So that's why I developed these ribbons, so you can like zoom in and still appreciate longer time frames, but see the chaos. Like this gives a picture to the chaos. Bulls are going to step in. What this means is they're going to have to do it before these ribbons not just flip, but they're going to flip and cross this gray line. And if that happens, typically you get a big move down. But then you can just retry again. A lot of times that happens where you get a move down and the bulls, they kind of settle down over here, and then they regain control at a later point. I could show you an example of that. I'll show you an example in the 3 minutes, so I don't have to zoom back so far. Well, this is close to an example of that. So sometimes it does this, but it actually goes under the gray line. That's not an example. That was continuation down. There you go. So lost control fully and then regrouped and then gave that big push. So that could be what's about to happen. But on the 1 minute, it might actually lose, and it might regroup down at 34.2 or something. Equivalent to where price is now 34.2, and then it might give another try up with the last hour and a half of of the quarterly and biannual is 6 month candle closing. A 6 month candle closes in freaking an hour and 44 minutes. Like this is a big deal. But one thing I do like what's going on for the bulls though, even though on 1 minute looks like they're getting ready to lose power here, but that's a very small time frame. Is that the 3 minute keeps hitting the Stokes down, but it's still closing relatively high within its ribbons. And what you can see that's totally different you can see the change of power is that so again, to reiterate, the Stokes were all the way down and price was closing above and or inside of the ribbons, as opposed to when the bears were fully in control on this short time frame. Every time the Stokes were down, there was a lower low outside of the ribbons, outside of the ribbons, outside of the ribbons, outside of the ribbons, and that marks all of the areas. So not one time during this bearish control did price ever close within the ribbons as the 3 minute Stokes were down. And so when this happened, right, so I was actually trying to long horizontal. Actually, I was trying to long something up here where before it broke down. I entered along, got stopped out, waited. I entered very slightly there and entered more heavily here, entered slightly more there, entered more here, and I'm waiting for the 1 minute the 3 minute to flip. So I added that is when this flipped, I added some, and when it got above the ribbons, I added a tiny bit more. So, that's how, when you're using a mild amount of leverage, you never just want to hit go now, like go time, like you just want to add in like if you're in profit and you're seeing a higher low under those two conditions, that's when you add to your leverage trade. It's so much better over time. Like I know sometimes you just, if you're playing with $5,000 and you're betting on it's going to go up like 5x leverage here, you might feel like you're genius and make $600 real fast in like an hour, but most of the time, over time, you're going to lose your money. You got to ease into the trade with signals, and so the signals I choose to use are these the ribbons and stuff like in higher lows, essentially, and the gray line. All right, so yeah, this battle's just continuing. Let's see which candle's getting ready to close. So the 5 minute closes in a minute. The 15, okay, the 15 kind of just started. The hour actually started 20 minutes ago. So I guess the most important candle closing that's happening now is the 5 minute, but that's not super important. The 15 minute begins to be pretty important. So we're in the middle. We're in the middle of the 15 minute candle. And so when you add to a trade, I at least like to make sure, I don't like to do it in the middle of an important candle closing. Like for example, the hour, it's 40 minutes in. I would prefer to wait to see where the hour closes and then add to a trade, typically, unless I get a clear signal like my 1 minute ribbon's flipping. Okay, even if it's in the middle of one, I will still do it. But if I'm looking for higher lows instead of ribbon signals, I will wait till, I typically like to wait until at least an hour closing. I try not to snag a higher low during an hour unless it's something like this, where I expect continuation off a big move. Most continuations, it involves the first several minutes of the hour going down. It just always happens. Like you rarely see like this candle here where it didn't go down hardly at all and it just kept going up. That's kind of rare. So unless I think the next candle is like very high chance of being green, and that candle starts and it goes down, and I have a feeling that it's just going to wick down, I will try to grab that higher low. That's kind of the higher low I like to do in the middle, or kind of the beginning-ish, but not at the. I would wait 20 minutes or 10 minutes for that to happen. So actually, if you zoom on this, you can see that happened. That probably happened at the very beginning of the candle, and this price movement probably happened at the very end of the candle. It's really weird. So, like end of candle attacks, I don't think price came up here and just stayed up here and waited for 45 minutes, right? I bet all this happened in 10 minutes. Like that's what I would guess because it's kind of common. So I will mark those two. I will mark both sides of them. So I will mark this is where it stops. Oops, that's a line. and I will mark this is the one before it blew up. All right, and so this hour started at 1800 hours on June 27th. So 1800 hours on June 27th. Well, I'll be damned. It happened at the very beginning of the candle. The exact opposite. It was the beginning of candle attack. And then it did really just chill out the whole damn time. Huh. So it happened all at the very, very beginning. Look, so 1800 hours and boom, 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 beginning of candle attack. So in that, so as you saw in the 3 minute, that one where it kind of converged and blew up, right? It happened at the beginning of an hour. So that's what that feeds back to what I was saying. I try not to make decisions in the middle of an hour. And it just so happened, it's because big players, that's when they make their choices. And so 1800 hours might have been when, I would guess that might have been when a 4 hour also started. Maybe. No, I don't think that would be it, would it? It'd be 2000 hours, right? I don't think that's possible to be, but maybe, let's see here. No, so it was in the middle of a 4 hour candle. So, so the 1 hour candle is pretty important. Somebody attacked they hit buy at the very beginning as that clock started, as this one ended and that clock started. Boom, 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 boom. So you get beginning of candle and end of candle attacks. And so if it's going to be an end of candle attack, bearish, right? I don't want to be buying now in the middle of this hour for it to go pop, 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 pop. I would, if I think it's going to rebound from that, that's when I want to buy. Because it's an end of candle attack is very common too. But what I can do is, if it's going to be a beginning, if the bulls come in and somebody hits market buy in, see over here where I'm hovering, it says 36 minutes, 18, 17, 16, counting down. If in 36 minutes and 14 seconds somebody hits market buy, I can market buy into that, right? Instead of hoping it goes up 5 minutes before, but the last 5 minutes goes da 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 da. I don't like to do that. And so, like the YouTube video that I released today, it's trying to drive the importance to you, you know, that of that. Like if you just make that one change to your trading, it can make a world of difference if you're not doing swing trading. Since I started a Patreon community, I haven't had time to day trade, and I kind of miss it. I haven't done since probably April, because day trading, you know, when altcoins are going 5x in 8 days, like there's no point, right? So actually I probably haven't done it since February, because there had been no point. But recently there has been a big point. That's really where you have to trade intraday, small time frames. That's the only way to make money in a choppy market. So I just started doing it today, actually. First time probably since February or early March, because I stopped doing it early March, not because of Patreon, because it didn't make sense. Like it was way less profitable than just buying something that on a weekly scale and waiting for it to go, like MTV. Like I sold at profit 36x, and I think it took exactly 45 days, something that fast. Oh no, it went 45x in 45 days. I caught 36x of it because I sold a little early, but I did buy the exact breakout. And so, like in moments like that, in things like that, it doesn't make sense to trade intraday. Yeah, I caught how I caught it was our community was hunting for the cross of the yellow and red here. And so what we got in the habit of doing as a community is spotting them, selling into the first push, and then usually they started retracing in March, and most of them just retrace in and then buying heavily that. And so from that moment on market, so the 8th of March, now go to the day, you can see here that from there, oh, don't make, gosh darn it. Nope, it was 36x. So I think I only got 31x of that. Yeah, so 3500 is 36x. So because 100% is 2x, right? So you gotta You have to add 1 to it always. Like 100% is double your money. It's not 1 times your money. No, it's 1 times your money plus your original money, which means it's 100% increase, but it's 2 times your money. So if you see 1,400% increase, that means you 15x. Or if you see a 500% increase, that's 6x your money, right? So, but look how many days, or actually I did it so I caught it almost on the exact day, maybe the day before, but it took 35 days. Yeah, no, so it was 36x in 35 days. Yes, exactly. Insane run. And so when it's altcoin season, there's no reason. That's why I stress to everybody, stop looking at the small time frames. This is why it didn't make sense. There's no reason to be trying to catch all this. If you see an obvious sell zone up ahead, unless you think it's not going to pass a horizontal here, then sure, but you still don't need to look at the small time frames. You don't need to just sell horizontals. But so right now though, in this wishy-washy market, when all the trading is just sideways and choppy, even on Bitcoin or anything, sideways and down, you pretty much, you have to look at small time frames. So what I said about the small time frames, it applied to altcoin season, and tried to convince people to stop looking at, for example, BPRO. Oh my goodness. I remember when I told everybody sell the exact day it hit its top. It's the YouTube thumbnail with the fireball. I told people selling now is a winning strategy, essentially but I can't give financial advice. So I can't, there are other large crypto traders out there who say, don't sell and sell now. I don't want to get sued. So I said very clearly on this exact day, because I had a trend line coming here, and I said, it's not going to pass it. And since it was wicking through, people were like, oh, it's passing it. Like, what if it does? I'm like, it's not. So, and so I actually sold 80% of my BPRO right there and staked the rest. But I didn't sell actually right here. I sold it at 3.6. Right. I sold most of it there. Yeah, because my trend line hit it here. Trend line going way back, but it hit it about right there. So I sold all of it right there. But it wicked past where I did, but obviously that was a slam dunk. So I got exactly 20x out of BPRO. Exactly. On 80% of my BPRO holdings. And 15 seconds later in that video, after I said selling now is a winning strategy, I said 15 seconds later, it could come all the way back down to a penny. And clearly it's done way worse than that. And I did not anticipate all this. But the reason why I got on BPRO is, take off these EMAs, is after that big run, people were saying gosh, I don't know, a week later, or no, it was even less than that. It was probably let's see here. Yeah, it was like here and stuff. Hey, it's already going back up. A BPRO was going back up. No, it's not. Like I said, no, and then people came on my channel being all cute. Haha, see, it's already going back up. I was like, get off the smaller time frames, people. It looks like it's going up, but it's not. It's not. It's falling with style, like freaking Buzz Lightyear style, right? So, and I was right, like it literally falling with style. But that's how dead cat bounces work. It looks like it's going back up, but it's not. Even though you did have a second chance to sell right at 3 pennies, that was a pretty good second chance. Actually, here was a good second chance too. It got to 3.6, which is, yeah, I think I probably sold 50% here, and then when it got back up the next day and topped out, and it started to come down, I sold another 30% of my original BPRO at 3. I sold almost all of it at 3 point, and it's in my proof of trade in the description section on all my videos. I literally snapshot my KuCoin account and labeled it all like, here's my MTB trade, here's my BPRO trade. Anyway, so let me maybe look at some of your questions now. Sorry, I've been ignoring you all. Make sure, yeah, I didn't even make sure my voice was recording, but good thing it was. All right. Quack quack is right. Quack attack. Hey, there will be a quack attack there will be a quack attack. I think there's a high chance BPRO could be a pretty good performer in subsequent, bull cycles. Even if we don't do 4-year cycles anymore and Bitcoin moves in waves like I've been theorizing, this, 14K was one wave, 64K was another, maybe 110K the next one, $250,000 the next one, so on and so forth. And you just have these crypto winters, almost like a season, right? So between here and here, that's winter. Here and here, that's spring. Above spring is summer, here is fall, and obviously here's winter. And it literally might just be seasons. Like, that's seriously, that might be what happens. And so, but that would be so much more profitable, because if it got in some undulation like that, you have more chances to buy winter. Yeah, you just have more chances, and people would be less inclined to think things are up forever, if there were more undulations, right? And people would get less screwed. So yeah, Quack Attack. I think B Pro. I don't think end of year it's going to get past even like a shit. I bet it does not make all-time highs by the end of the year. With one assumption: if Bitcoin does not get past 70K before January 1st, B Pro will not make all-time highs this year. That is my guess. But Bitcoin has to be raging for altcoins to rage, right? So, all right, Quack Attack. But yeah, I'm not getting rid of my B Pro, even though people ask me, but it would have been better to sell 100% and buy it here and stake it. Yeah, but you don't know that here. Of course you can look at it now. Of course you can. But I didn't know if it was just going to do this and then make one more push by the end of the year, because I thought, it was a 4-year cycle. So, so I sold 80% of it and staked 20. Like, that was a great bet, right? Even though my 20% sucked, but I still way profited awesomely with 80%, so I'm good. Hell, I could have my 20% go to zero and I don't freaking care. I'm just holding on to what it's spitting out. Like, I think it's spitting out like 1,200 or 1,500 B Pro a day at me, maxed out staking. So if 1,500 a day, so if B Pro gets to, for example, lies. Really, calculator? My new computer came. Oh, there it is. Oh, whatever. It went on. So if it's like 1,500 a day, and it gets up to a dime, right? Next year, and I'll drag this over. If it spits out 1,500 a day, and I wait on all that, even though it's losing 99% of its value, 98% of its value now, only with a portion. I'm not saying all of my B Pro. If it spit out 1,500 a day, and B Pro is worth or no, that's $10. Shit. So right now it looks like nothing. It's 0.003. And so it's only spitting out $4 a day to me, right? But if I don't sell that $4.50 a day, and I wait to, in a year's time, by December of 2021, or no, December of 2022, sell it when it's at a dime, all that $1,500 a day became $150. And that's about 600 days out. Yeah, that's 600 days out. So it's times 600. And over a year and a half, that's 90 grand. And so that's what, like, that's my second part of my answer when somebody, I think it was VIP today, and this is YouTube, like, people on YouTube should know this too. Like, this is not private community stuff. Like, you guys need to know this. You don't have to have all your portfolio in one thing. You can have a portion of it where you just stake, even though it's going down 95%, it doesn't matter, because this is true if it recovers. I know Bitcoin will recover, or at least I'm 99.5999686969% sure Bitcoin will recover one day, even if it takes 2 years. But if you are very confident that your coin will recover, and you take profits on 75%, but stake 25%, even through a bear market, because you didn't know the bear market was coming, if you wait to realize your gains until the next market gets hot, it's huge money. You just have to freaking wait, right? Assuming you didn't buy B Pro at freaking 4 cents, then, but you'll still be getting interest, but then you wouldn't have 2 million of them, right? But most likely. If you buy Chase green candles, then this theory doesn't work. But I'm actually still in profit. I mean, my raw B Pro purchase was at 0.002. No, I bought some at between 0.002 and 0.004. So I guess I'm on average barely in profit. But I already sold 80%, so I sealed in my profits. Then I flipped it to MTV, Silo. Like, I got a good one early on, and it really helped me. Yeah, so like this staking, it's measly, $4 a day. But if you wait a year and a half to sell it, and BPro gets just to a dime, you'll have 90 grand of just staking. And then the 2 million, you know, if you're staking 2 million, so that's 90 grand plus the value of the BPro itself that's staking. So that's 290K. I'm okay wait until next December to potentially have 290K with one investment, with 20% of one investment. Hell yeah, right? So you should split your portfolio up into multiple chunks. Like I wouldn't stake everything. I would only stake a sliver. Unless maybe you think you're buying a bottom, sure, maybe do like 30% of your portfolio in staking if you think you're buying a bottom. But if you know you're selling at a top and you sold somewhere here, like I wouldn't do that much of my portfolio. But if your strategy is holding tether now and trying to find coins at a bottom and you're guessing this is a bottom, maybe start easing into it. Maybe not buying everything now, but buy half, use half of your tether and then wait for Bitcoin to possibly, you know, break the weekly 89 and go down to 24K or 16K and then use the second half because you don't know how low it's going to go. So you got to ease like dollar cost average in. So if you dollar cost average near a bottom trying to stake stuff, you would actually be in a, you know, better position than even I am. Even though I did buy really low, so I'm still okay. But I bought a breakout. But that's not just with BPro, that's all your coins, right? Like that, it's anything that stakes, especially KuCoin stake is really cool. It's a great deal. Yeah. So, all right. So let's, yeah, I'm really good. CJ, thank you for asking, even though you asked that several minutes ago. Yeah. Thank you. DYL. Yeah, it was a great, I thought it was a good story too. Like, I didn't even know that's what the video was going to turn into. I really didn't. I just knew I was going to talk about the monthly 10. And then I just got excited and that's what happened. Like, so when I make my YouTube videos, you know, I think it's, you know, actually, I don't think I've ever planned the actual content down to a word. I just have an idea that I want to talk about that's relevant to the charts or relevant to teaching noobs, right? What is all this? Oh, that's my scribble from the video. I just have an idea that I want to talk about, and I don't plan any of the content besides that. I just run with a thought, and then I go from there. So like what you see on my videos, it's, you know, it's usually just, it's right in the moment. Like it's I just know roughly what I want to talk about, and I start talking about it. Bear bull, I would say 55%. Well, so somebody asked the question, what are my thoughts on bull or bear market? What percentage? I don't know if that's the right question. I think accumulation until October might be the most probable. So I think neither. I think crypto winter and the bottom of an undulation is, I don't know if that's 50% probable, but bull market continuing right away or bear market getting deep and, you know, getting nasty down to 16K or 12K, I think those might each be 25%, or man, maybe higher than that, maybe as close to 30% likely, right? And I think accumulation is 40% likely. So the most probable in my mind is accumulation, just sideways until it starts going up, like a rounded bottom, essentially. But essentially a big drop and a rounded bottom that happens slightly more quickly than a bear market. So I would say 30, 30, 40. So in the end, it could go up, it could go down, or it could go sideways. But everybody loves. That's why you tune into my channel, right? Because it could go up or down or sideways. But that's the truth. It's knowing what probabilities or knowing how to trade within or trading a counter trade within it, right? Like, you know, if the big macro move is down for the next 5 months, but you anticipate a strong bounce, you should play a bullish bounce, right? Like that's what you do. Like, but you take profits quickly. Anyway. So yeah, could go up, could go down, could go sideways. Woo! This month is gonna close kind of soon. All right, so the 1 minute did turn into a higher low. What's the 3-minute ribbons doing? They're getting ready to flip. So I probably want to see one more higher low or a higher high, then a retrace down to test this gray line. I'll probably add to my long here. I'm just too weary to do it now. I think I'm more poised to get out of it because I think my average in is about maybe after I added a few, maybe about here or so. And I want to be poised to get out before it gets down there because the platform I'm using, it's not, I can't just drag stops into profit, unfortunately, the way I'm trading through Shrimpy. But I guess actually I could have a moving stop. I guess I might want to actually do that, but I'm going to manually do it though. That's why I'm watching the charts till 8 p.m. and that's why I'm doing this video because I'll be watching the charts. Even though I might not be able to go till 8 p.m., I'll probably have to stop at 7 because I got some stuff outside I have to do before it's dark. So, clearly I'll set my alarm around 8 to see what the hell just happened because I have a feeling the Bulls are going to do it. I think they're going to squeak it out. All right, so let's see what other questions you got. Oh my gosh. All right. All indicators are lagging. 100%. Because none of them tell the future. They take past price. All of them do. They're not telling the future. They're calculating anything that is an indicator is indicating from this point backwards. So they're all lagging. I just don't understand why I'm getting that question so much about moving indicators. But if you don't like EMAs, then don't use them. But they work. Okay? Do you want me to show? Okay, here's the best answer. Watch. Here's why. I don't know if you watched my YouTube video, but in the middle of a YouTube video, I wasn't even planning to talk about this. I said, shit, bear market. Oh, God. And I made the video about the 2021 cross, right? And it has a 100% hit rate. It's because it works. Let me show you. Watch. Crazy, huh? This cross called the future. Lagging indicator, my ass. You can interpret the future or probabilities of the future. So you can't tell the future, but you can see it with a high probability. That's why I freaked out in my video, and I even scratched my head, took off my hat. I was like, oh no. I was not happy to see that. I wasn't expecting to see it. I was just making an example, right? In all bull runs, look, when that cross happens, it is the end of the bull run every single time. That one didn't mark it quite as perfectly, but this one, it marked it absolutely freaking perfectly. Let's see here. Here, too. End of the bull run. And if you mix that with the 10s, you can get that, you can get a heads-up signal, even though the 10s do give false signals sometimes, but look. So the red, the opaque with the bright red crossing, that marked the, that meant that there's maybe a 70% chance that the bull market's going to end. Because there were fake outs along the way. Like here, it did it, and it still, it crossed here. So it's not, but in Bitcoin, the yellows have a 100% hit rate. If you're in a bull territory and there's a cross, it has a 100% hit rate. That's why. And it tells you before it happens. So it's just, I don't know which traders are telling people lagging indicator all the time, but I think most people are saying it without knowing what they're saying, which is, true to a lot of stuff. But so here, it gave a false signal, the red crossing the red and here. So that's why I said it's far from 100% hit rate, right? But the red give you an indication that, oh crap, this is bad. This is like potential bad news. We are pretty toppy. We did just go parabolic. I might want to sell everything into a stable coin or US dollars. So the 10 gave you the heads up before the 21. Same here. The 10 gave you the heads up at the damn top. Look, it gave you a heads up at the top. Actually, this gave you heads up almost at the top. Crossed right there at 60K, but the red happened at 62K. That's why I use them. They freaking work. You just have to know how to use them. So all indicators are lagging. There are none that take future price action. Therefore, by definition, they are all technically lagging. Now, within the definition of lagging, perhaps there are some indicators like relative to each other. Maybe it's a point of relativity. Like these aren't considered lagging because relative to other indicators, you know, they do this and that. Maybe, but by definition, they all are technically. If you take the word lagging out of the context of trading, they literally are lagging by raw definition. So, yeah, it's really a bummer that there are traders out there, or it's Investopedia or what. I don't know what the hell is getting so many people to say that, but it's turning you off from like one of the most simple and clear ways to trade, and it's a shame. Like, but you don't have to use it. So, but I literally trade with EMAs and horizontals. And that's what I use. And so to try to add more information to my trade to determine how good of a probability I do or do not have, I use things like RSI and Stokes and candlesticks. So RSI, Stokes, candlesticks, EMAs. Those are my 4 go-tos. And if I cross time frames with all those 4 are actually 16 indicators, because if I use 4 time frames, it's 4 indicators on 4 time frames, and they're all telling you different pieces of information. And then a 17th for the congruence among them. So you get a really probable trade when they all start aligning from and that's what those ribbons do. It shows you when things are starting to align. And you can visualize bulls taking control, right? Like So I just don't understand why everybody's saying lagging indicator. There are just so many people who are saying that around, just who are new to this, and I don't know. I don't know which trader or if it's Investopedia or what, but it's a real bummer that that's what everybody's thinking, and they're asking me why, like questioning why, when like as in it's not good to use it. Shit, people make like millions and millions and millions of dollars literally using EMAs and freaking horizontals. That is it. So, but then to add to my probabilities to know when to go in heavier or go in lighter, I use other indicators that tell me, it's still pretty uncertain. Maybe I'll stay out of the trade, or yeah, this might be 70% probable. So go, moderate in or ease into it until you're in profit, then add. So but mostly I use EMAs, candlesticks, and horizontals. That's about it. You really don't need it. Now, if you're going to do stuff like scalping with leverage, yeah, you need more tools. You need a lot of volume tools so you can see where volume's coming from. You need, perhaps even having on-chain data about, a lot of Bitcoin was just moved to the market. So, if it happens right before a monthly closing, actually that might be useful for everybody. If it happens right before a monthly closing, be ready for the next month to really take a downturn or an upturn, right? Just depending on the shape of everything. So, I mean, you can use a lot of different stuff, but I try to stay to those 4 because they're really 16, and it seems to work for me. I've used quant data or quant graph or whatever, and I'm trying to incorporate more stuff, but, when my channel is mostly geared towards folks who are newer to this, so, who are newer to crypto and or just thinking about hitting buy and sell more than once in a year, right? So I don't get into the complicated stuff that sometimes I use on the side on my own, but typically I really do just stick to the stuff. It seems to work. But during macro things, I like to know when Bitcoin's moved on and off exchanges, what the hash rate's like. I do follow people like Willy Woo. I listen to 𝐿𝐍𝐴 in his channel. I do a ton of market research. When my patrons, for example, in my community, they're not happy that I'm not hanging out and chatting. Well, that's what do you want me to do? Hang out, chat, or do a shit ton of market data so I can be the aggregate of it and tell you all the important crap of 6 hours of learning that day, So, that's my channel is geared towards people who need to learn the basics, because even when you know the basics, then you have to master your emotions, which is even harder. Understanding these concepts is the easy part. It's making your emotions not screw you with simple things like, if you use leverage, set your stops at these exact levels, depending on how much leverage you have. I have people who can't follow the rules, even though they know it. And I've been on video camera face-to-face saying, no, okay, if you just went in that trade, right, set your stops now. And they don't do it. Like they say they do, but they didn't. Like it's just crazy how human emotion is. So that's why I don't get into all these technicals, because to a certain point, it doesn't matter. It doesn't matter. You're gonna get screwed if you don't practice basic things and then master your emotions. And then if you can make a sustainable profit, then add the more complex stuff. But to try to do the basics and the complex stuff before you even have practiced your emotions, which can take years, it's literally to the point of being pointless. It's almost pointless. It's definitely not pointless, but it's almost pointless. However, there are some people that I've seen in my community that honestly, they got their emotions in check right away, like way faster. I mean, hell, I'm probably like middle of the road or slightly stubborn. Probably took me 2.5 years to reel that in. And I have people who did it in like 2 months. Damn. Unless they were giving me fake numbers. I never saw their actual accounts, but I think they were telling me the truth. I have people who got their emotions under check real fast. And those would be people who would then want to, only include my channel or my community in their, repertoire of crypto learning, right? Because if you get beyond that and you're ready for the more complex stuff because you've mastered your emotions, you've made profit for 3, 5, 6 months straight, okay, yeah, then you do want to learn other forms of trading. But because the retail investor market gets so hot so fast, I'm going to stay catering to that market because those are the people who get freaking screwed. And that's what my channel's for. I'm trying to help people not get too screwed, right? So, yeah. So that's my long-winded answer. Yeah. So, but it's a good question. But I'm letting you know that there's so many people are saying it, and I do think it's a shame that not only so many people are asking it, but in the way they ask it, because I don't know if it's fully understood. And it almost seems like it's being frowned upon, which is really silly. You should not frown upon EMAs. I mean, yeah, I just showed you 100% hit rates. Like, come on now. Oh yeah, I'll show you another one. In my VIP community last night, I actually was hanging out chatting. Somebody said, "Hey, there's no squeeze play, right?" Because they tried to trade similar to me. All right. Well, I said, actually, yes, there is. The 1 hour might squeeze price down. Look what happened. Red squeezed price below yellow. Right when it squeezed it, it popped out like a soap bar. EMAs work. EMAs work. Period. Lagging indicator my ass. I can tell from this that the likelihood of this being squeezed down was over 50%. So I could see the future with a high probability. So it's not lagging. As long as you know how to use it. You know how to use it right. Even though on the daily squeeze play, it had a 100% hit rate and I got it wrong. But that was a learning moment. I made an apology video because Wyckoff pattern is not mass psychology. So it's not going to follow 100% plays to a T anymore with any type of indicator, whether you're MACD or whatever. The only one that really got it right was the pi cycle. Pi cycle is the only indicator that got that shit right. And my yellows crossing. My yellows crossing and the pi cycle, that's it. 20 and 21 crossing and pi cycle are the only indicators that said much beforehand that is major crash, prolonged down period incoming. So yeah, I mean, like I was the only for a month and a half almost from late March to May. I was the only one screaming like big correction, big correction, big correction. Even though I did get fooled by Wyckoff, I thought the correction had ended after that flash crash and 3 months consolidation, but to be followed by a bigger crash. I did get fooled, but I still saw it months before it happened. I just thought it was the first big flash crash because it got the most liquidations in the history of Bitcoin by a mile. So I thought, yeah, that might have been it. Maybe march on to like 90K before, I thought it was a 4-year cycle. I thought we were going to charge up to December, but whatever. But my EMAs told me, shit, dude, you're probably going to be wrong. So they're not laggy. They were trying to tell me something. I mean, even my ribbons here, look. And this is what makes me feel the worst. That I missed this big dip. I feel like it was so obvious, but I didn't use the 1 hour and the other time frames at that point. I was still kind of developing my EMA, my ribbons here. But it was so obvious that the take off price. Look. Bulls clearly in control. Correction. Bulls in control for a short amount of time. correction. Bulls took control barely. You can tell they were like they're just hanging on by a thread. One last gasp of air. Shit, bears are like, this is the signal. Uh-oh, bears are starting to take control. Maybe bulls will come through and you'll come up and start making new highs, right? Well, no, because the ribbons never got above. Then they flipped bearish right there at the gray line. Right there. I feel bad about not saying that. So obvious. And had I been on this time frame, I would have seen it. But I was so focused on that 4-hour midterm time frame. And I was so convinced because Cardano and Ethereum were freaking flying to the moon. I thought the correction was over. I thought price would bounce on this gray line. This is the 4-hour ribbons, a different time frame. I really thought it was going to bounce, make higher lows until it really started taking off. But it was the 1-hour long ribbons that told me that, shit, dude, you're totally wrong. Yeah, I missed it. I feel bad about that. But, you know, you can't expect somebody to call the exact moment that a drop's going to happen. So, but I should have been able to. And I do still feel bad about that, honestly. I really do. Like, not even to, no, not, you know, not just to my patrons, but even to the YouTube community. Because although the prior 10 days, I was telling people it's a good idea to hold tether. I did say it 2 times on 2 different videos. So that makes me feel slightly better. But I wish I could have given a more specific signal. Yeah, but it won't happen again. On such a like power move like that. That was especially with my 20 and 21 crossing, the yellow lines crossing. Like my tools that I use that I'm, you know, that most other traders aren't using. Even though I saw a couple of others talk about 20 and 21 crossing too. This year after I made that video, but they had talked about it in the past as well. So the past bull run, I've seen people talk about it, but most people don't look at that. And then plus my ribbons, which I'm the only one who uses in the same way. Those special-ish tools that I use just were screaming at me, and I wasn't using them right. So, yeah, that's what makes me feel bad. Just that's what I'm here for. I'm here to try to help people not get screwed, and that was I missed a pretty big opportunity to help people out. But at least throughout this whole time, I have been telling people exact horizontals to sell their altcoins, so I can't make you press sell. In every single video, I put horizontals on sell points, and almost all the cryptos hit that. Now, did my channel say, hey, this horizontal looks like it'll hold, coming back down, and then folks bought that, including myself, like BPro at 1.6 to 1.9 cents. I was a buyer at 1.65 cents at 0.0165, and it busted through. Sure, at the same rate, no one knew the 4-year cycle was going to end like that. So at the time, it was a statistically badass buy. It was a statistically awesome buy. But since it wasn't 100% chance, you know, the smaller percentage played out, which happens sometimes too. Like sometimes you flip heads 3 times in a row, right? It's lower probability that you do that. I think it's like 12.5% chance, right? Yeah. Yeah, 12 and a half. Yeah, it's exactly 12 and a half. So it's only 12.5% chance that you flip a coin 3 times. So statistics isn't trading, right? So I took classes on statistics, and I still read about statistics because it's just nice to know what statistics are, so your gut has a better feeling. But anyway, you only have a 12.5% chance exactly to flip a coin 3 times in a row. And if you already flipped it twice in a row heads, you still have a 12.5% chance for the next 3 to be all heads. It doesn't matter how many times before that, right? Anyway, but sometimes you can do it, and that's kind of what played out with this end of the 4-year cycle shit with Wyckoff and the institutions coming in. And you know, when so many people are saying, "Oh, this bull run might be different because it's going to go up forever," is what they were implying, right? So that was like when everybody's making, it's going to be different, you know, it's going to go on, it's going to be a mega cycle. I did say in a couple of my videos, and one was live video, but I said very clearly, no, if the institutions are in, I think if anything, the bull market will end earlier. But I did say October, November. I did not guess this month absolutely at all, obviously. I had no freaking clue it was going to happen this early. But I just knew, I actually thought institutions were going to front run each other on the top. So I thought it was going to end the bull market a lot earlier. And that was a pretty good guess. It mathematically makes sense, incorporating not mass psychology, but the psychology of, a select few who are running who are managing millions and millions of dollars at these institutions. But that's not what played out at all. What happened was a Bitcoin cartel got together, and they're in on it with a couple of exchanges, and they're running their programs in coordination with the exchanges. Yeah, that's what, and they're all in on it together. And they honestly, they might be using Ethereum to do it. They might. So cartels break down because it's advantageous to cheat if you're in a cartel against the other cartel members, like not cartel like drugs, but like a oil cartel, like Saudi Arabia, all that stuff. Whatever. It's advantageous to cheat. So cartels typically break down. But if you have smart contracts up until a certain time that this is the plan, this Wyckoff has been going on a long time. I almost, like, the irony of this is, I think crypto itself might be facilitating this. Because it's not one player printing exactly a Wyckoff pattern. It is not. It is multiple of them coordinating. It is a Bitcoin cartel. I don't want to say swear to God, because that's not nice for religious viewers and all that. But I don't like to say it anyway. But I swear to goodness, I think the likelihood of that being true, Bitcoin cartel, is true. It's almost impossible that it's not true. But anyway, so all right. Well, those indicators are for my crackhead and VIP tiers. So that's part of the Patreon community. Yes, 𝐄𝐍𝐓. It could go up, could go down, it could go sideways. Represents a reversal shooting star candle. On what time frame do we have a shooting star candle? Six-month. This actually looks healthy. The quarterly looks really good. Although it looked okay there too. And this could be what's about to happen. Even in 2013, no, that's 2011. So 2013, the quarterly ended green. Shit. I mean, but structurally, it doesn't look that bad. It looks questionable. Oh, this one? Yeah, the month, that's what you're talking about. Yeah, that's pretty bad. But the trend, right? It's a question of how long does it change? It doesn't define 6 months. Nope, 6 months. Shooting star, 6 months. So monthly candle, shooting star, 6 months. No, it could be 3 months, and it's been 3 months, right? So, yeah, when that month closed there, you're right. I missed that as well. You are absolutely freaking correct. So on May 1st, at that candle closing, yeah, that's a damn good observation. That's a really, yeah, I did not see that either. That's a very, that is a fucking awesome. So on May 1st, right there. Yep. Good job. That's a fantastic, yeah. And I was the one, talking about weekly candle shapes here, trying to say it's gonna go down, it's gonna go down. Here, and let's see, where was it? Or was it the 2-day? I think it was the 2-day. It was right here. I was like, yo, this is not good. Like, you don't want these dojis at the top. That just means there's indifference. It means the bulls are losing, like they've lost control. Like, this is not bullish control. Even though you're above the 10, it just looks like the tides were changing. And of course, Wyckoff pattern, institutions pumped it and then dumped it. Of course, because they bought a lot of Bitcoin and pumped it so they could add shorts up here, right? And then once they had all their shorts locked in, then they sold all that Bitcoin as they made a shit ton of money shorting the market. And then when they stopped selling, they took profits on the shorts and probably didn't buy back. I don't know if they would buy it back or not, but they took a lot of profit doing it. Yeah, so all we got to do, guys, is let's put $50 million together, and we'll do our own patterns, right? We'll do our own patterns. Yeah, baby, I think it's going to break up. I think it's going to get it done, folks. I really think it's going to break up. I think it's going to close above. But I would really like to see on this scale, I would like to see a higher low here first, and I'd like to see consolidation here. Could go either way, though. I mean, it could. So sometimes when these ribbons cross on the 3-minute, it does actually turn back down. It can't complete the flip. So if I take price off, so this is like a 4-hour chart, right? So you're literally staring at a 4-hour chart. So kind of like, actually this stayed bullish the whole time, even though it was wobbly. So like this might be what's happening. Sometimes it just can't complete the flippening, and then when it can't, then it really does tank. Like these ribbons show you. Like so once you see price really getting up here aggressive, and then say and the ribbons start doing that. So let's put price back on so you can see, right? It actually did it fast, so you had no freaking chance on that. Actually, the ribbons wouldn't have given you. Oh yeah, you had a heads up. It was converging, and it was on a downtrend, so I guess it did give you a heads up. And it hit that line. See that gray line? Look. I mean, just look at how these things work. Just look at that. I don't know why these gray lines work so well, but they work with price and with ribbons. For some reason, those two relationships mixed together, they get so many things right. It's just insane. Just crazy. All right, folks. I got to go get some stuff moved around in the back of my house because I'm going to have a well company come over. I have no water in my house right now for the second time in 7 years. I replaced, it was, what do you call it, galvanized steel pipe that leads from the well to my house. I replaced a chunk of it that big that was leaking. And I had no water for 2 days because it took me a while to dig through rocks and dirt. Like I had to dig more than 36 inches. It's 36 inches down, but but I had to dig lower to get my hands under it, like cut tube out and put new tubing in. But it busted farther closer to my well now. And if I leave my water on, I just have water like bubbling. And it just floods the outside, so I can't have that going on. And the folks come tomorrow, and I got to move stuff. I got a carport outside my barn. I got a lot to do. So I might be live again at 8 o'clock, but I'll probably just personally just check it to check my position. So now you know what to look for on 8 o'clock. So let's see here. It's in 50 minutes. 50 minutes. Very, very important. And you can look at the monthly, so you'd have to actually use the monthly. And if it closes above and you see that new candle print above this line, so if you put on the 10 EMA and the next candle starts and you can see it just barely squeak, like it's just barely squeaked above the line, right? That means there is a good chance that either accumulation until October or a bull market, like immediate bull market, continues. It gives it a better chance. I'm not saying it seals the deal, but bulls can hang on by a thread on a yearly time frame. By a thread. That's what's happening in 49 minutes. So hey, everybody, thanks for joining. We'll see you next time.